away we go here on a Thursday. Thirsty Thursday. Shout out to everybody. How you doing? Let's get a couple moments, get the rest of the people into the chat. We'll give a few books away and talk about the big check back that is official now. What's going on, David? Thank you, as always. You guys, you snipes. Appreciate what you guys do. Mr. President. Ooh. Evan, Market Observer. Everybody else. Hit the like, please. Coming on in. Subscribe if you want to get the notifications. And let's get to it. So we left last session, Tuesday, looking for the check back. Weekly check back on Ethereum. Looks like this. And remember I said 1,044, the prior week's low. Pretty much the same across your all the databases, all the data feeds. You know, this 1040 level has got a lot. There's a lot there. Would be great to see this thing give us a bullish candle after the check back. That would be significant to say the least, and that occurs above 1170. Big stuff, folks. I mean, this is textbook HSI confirmation with check back. And I'm going to throw something out in a little bit that we should all consider. So, before I get much further, let's reward the early arrivers with a Volume 3 book. So, please only if you don't have Volume 3, but I'm happy to give away a couple of the free books. So, let's go with, just a simple question here of what is the check back. So what's the number on the check back we're looking for? First one to put, what is the prior last week's low? Someone give me that number. What's the big Ethereum number that we're looking for? First person to put that exact number in wins a book. I'll leave it up to you guys to respond. We'll give away 2 more books after this one and do this as our Thursday thing. Give away books every Thursday. Get you guys back in here. And then what you have to do is you have to, okay, there you go. Examos, 26. You got it, 1040. 1040, not 420, 1040. 1040. I'll take 1040. That was it. It's depending on your feed, okay? It's really 1040 is the number. 1044 to be exact. I'll take 1040 because that's what I was saying, round it last time. I was looking for any response, but okay, you have to contact Miss Stephanie, Examos, Xamos 26. You go on Discord and you send her a note with your address and we'll mail you the book. 2 more books in a little bit later. We'll give that away. But I can't underestimate, it's really difficult to see the opportunity down here. There's really, if you didn't know HSI, you didn't know what was here, you could just say, this is breaking down again, but no, it's not. And I want to be really clear on the fact that we are looking for this trigger on amplified to come out of the zone. Once that happens, we go into full reaction mode. So maybe a little bit of time, but look, that 1040 level, that's just enormous. It's the first signal we've seen in months on the bullish side. Not to mention, you've got different things going on than, say, the last time we were there. I mean, this is the kind of, well, not kind of, this is the exact kind of check back for just a reaction we want to see. And you go back to the last time it happened. Okay, HSI triggers. I've been reviewing this because it's important. On the close of the bar, you won't see the arrow be official until the close of the bar. Then it comes back, retests the prior low extreme in bullish. If it was bearish, you would be retesting the prior high. And then you stabilize and start to make something out of this extreme reversal. So these are still early signs, but we got the check back. That is the same on Bitcoin. And look, we should see action. And above, let's say 1276, 1280, that's where things could get really interesting. You're still in this range, basically 1,000 to 1250 generally. Seems like a big range, but this is super tight on the low side. 880 down there on the low side, it's your max low. But what we're saying is that low does not get taken out. That should be it. Much like you had over here. Okay, once you establish that low, you had the signal, the check back. You take out that low. Okay, you know you're have failed the signal. But that's not what's happening. And you break it down to 4-hour, hourly time frame. Here's what you got. We talked about the bearish bat pattern. That actually gave you a nice pullback, but only a type 1 correction. That's it. And perfectly to the 1040 level. That's this line. So bang. Run right into it on the 4-hour. At a minimum, go back to 1250 from here. 1250 is the retest target. I don't care what happens in 3 months from now. Okay? This is just an immediate reaction. We've been pegging for Ethereum to check back, make the low, and give us some kind of reaction. We weren't going to get the full flush. We talked about that this week. The 680 level, no. So what we're really looking at against this weekly time frame is simply this kind of constraint against the big downtrend. But it reacts from here. It reacts from here, just like that. And then, probably get a little boost. I don't know, 1,500, something like that. And then come back down for the bigger move. Can we come back down to the 680 level like that to end it? Maybe later. I think this has got reciprocal. This is a reciprocal ABCD where you've got a counter trend move. Okay, and it's a little bit of a thrust reaction within the predominant trend. Another thrust reaction. Yeah, that could maybe 2,000 area. Still in a downtrend, but that's the kind of reaction I want to see, and should take full shape above 1280. Keep an eye on it. This is crucial stuff. And look at the calendar. Thursday session, we go to Sunday. All you need to do is rally 140. Basically a 10% move. So that's that's a big consideration. And the other thought that I had recently, we've talked about why this ABCD structure it's important. We have an all-time ABCD right off the top from the all-time high to there. Come back down. Your ABCD was I forget. Was it? It was 940 or something. Something like that. Let me fix that. So all-time high up there was 48.67. Incredible. 48.67 down to the low at 21.59. Basically 2,600. 2,700 points. Come on, Marine. And then off of the top. Yeah, 27 down. Gets you to about that 800 is incredible. Gets you to about that 800 level where we are, 880. So there is a reason why we could react off of that ABCD. The other thing we've maybe questioned, is it a Gartly? Is this an M shape? Of course it is. Where's our B point? Our B point there, C point, bring it on over. So I've been saying that this B point is not really clear. The B point is 50, depending where you're pulling it, okay? 56, 55, it's really close to the tolerance. The B point on a Gartly, the tolerance plus minus 3%. That means the B can be 64 or 58. Here it's 56 on a big number with an ABCD. All of that lines up to where we are at the moment. One second. So I'm just thinking reaction. This is a probable reaction. We spend 4 weeks down here. We trigger successful check back. We're so early in this development, but could we get reaction and then come back later in the year for the type 2 even if it is a Gartly? That's how I would look at that. But early reaction signs are here. They are. Much in the same way with Bitcoin, folks. And you're not going to get this anywhere else. Bitcoin, remember what we said yesterday? Retest the low at 19,000. Basically, depending on your feed, some were 19,200. Others they were 19,000 like 25. They all checked back. And they did it in kind of an exhaustive way, which is I think is really interesting. Here is the Bitcoin trigger bar. That's last week's candle, remember? Go to Monday. We talked about this Monday of how this wasn't official until we hit that close. And then it came back, retested the low. Actually, your low is right here. So 19,000 check back, bang, in. Good. Great to see, actually. What do you need to see here? A bullish candle. Give me a bullish candle, please. And that bullish candle really gets triggered by Sunday's close above 20,900. Why not give it a little healthy boost above 21,000 would be great. And then look at these kind of, stringy wicks, if you will, trying to bust above 21,000 the last several weeks. Can't. Simply can't. What is down here is actually that big exhaustion bar close. That's really what you're struggling with. So back from June 13, okay, you really need to see a close above, 20,008, 20,007, anything above 21,000 would be a good sign, would be healthier. And you do want a bullish candle here. I mean, would be super strong. And then we go into, say, I don't know, some kind of daily reaction. Critical stuff here. I really, again, this is the first time since the peak. So since 68,000 for the second time here, we haven't had a signal like this. Take a look. Amplified still overbought or oversold, sorry. But a bullish close above 21,000 would get us out of the zone. A lot going on here. I mean, doesn't seem like a lot, but absolutely we're drying up on amplified. The selling is just it's not following through. So some kind of reaction, we've got a complex formation. And I said this, I will stick to this of giving a thrust up and then maybe a retest later in the fall to finally resolve the downtrend. Look, we'll put the downtrend channel there. Okay, you're months away from cracking that. September, October, but doesn't mean we can't have some gyrations in between. Don't want to ignore this signal. It's um, it's kind of like this proposition, really. You're kind of like here where you were last summer. You came down around 31,000, you retested it, and then you stabilized before you really had some kind of reaction off of that move. Same deal. Oh, here's something you want to take a look at for sure, which is total. So total crypto market cap did the same thing. Came back. That check back yesterday was 830. Really healthy. That was just impressive. The low, what's last week's low? Last week's low, 837. We're now trading 886 billion. I didn't know. That's just a coincidence. 886, 886. But look at the daily. Again, remember your daily. You've got major, look, you got patterns. We do have patterns here, folks. We're all type 1 reactive patterns, but look, there are patterns. Big, deep crab pattern. Let me, there you go, clean that up. And that's at 896 billion. So can we get some kind of reaction out of the zone? I think we can. Just reaction, please. Only reaction, but that's what's trying to develop here. And against the weekly level with a check back already, I think anything above really that 3-bar level, which is about, what is that, 960 trillion, a close above 960 trillion on the weekly would be strong. Let's see what happens Sunday, because that would pull it out. Are we going to get this kind of a situation where amplified RSI gets out of the zone by Sunday? Because if it does, then next week we go. If we hold in here and we don't get out of the zone, then maybe another week. But as long as these lows hold, and those lows basically 820, 830 billion, that's all you need to see. Couple questions. Hey, what's up, Eric? Eric's asking, so how do you regard the previous pattern that didn't complete? In which one, Eric? Bitcoin or crypto market cap? Again, all of these just reaction. If you're talking about, say, this pattern, okay, look at the prior on total crypto. We did have, take away the big deep crab, look, we did have a daily trigger here with a pattern. And that was up at, the official trigger was 1.6 on the total. All right, well, this is, that was a type 1 of that. If that's the prior pattern you're referring to, type 1 reaction. That's all. That's what we're looking for here. And then that failed. I mean, that came all the way back down of the hop level, secondary test. It failed on your hop there. Okay, you're targeting hop on that because it's a type 2. Look, from here to there, it hit target 1 and completely collapsed. Your XA minimum is right there on that first pattern. But when it hits it, there's no confirmation after that fact. Then you look at the hop, still no confirmation, no confirmation, no confirmation. I mean, HSI did not generate until all the way here. So that first one was just a reaction. This one is just a reaction on total. But what we're talking about simply being, exhausted. If we were not going to flush, and remember the June 21 date, June 21st, I said that should at least give something for a little while, meaning some kind of inflection low, some If it wasn't going to basically flush by the 21st, there's the 21st. We talked about that on Bitcoin and Ethereum. That this will probably do a consolidation, counter trend reflex rally. And we're still there. We're still in that phase where after a devastating loss of, I don't know, what did total lose? Total was 3 trillion at the top. Yeah. Yeah, it was practically 3 trillion, 2.9. Yeah, it's 3 trillion at the top. So a healthy 65, 70% correction. Yes, focus on this current pattern. This small little crab pattern that gave you a reaction. I see what you're saying. Ignore that. The bigger one is off the 1618, and it's also off of this last pivot up to the all-time high from October into November. And all the markets, remember, they had a move from October till December, and now they're all at or below 1618 extensions of that final move, which is a temporary state of exhaustion anyway. But it's there. It's ripe for a reaction. I don't want to be selling something that is sitting in a bullish zone and checking back on a weekly about to give me some kind of little zip bounce. I really think that's, not too crazy of a scenario. And we even said, hey, if it can do a 236, like to 1.29 trillion or 382, whatever it is, some kind of reaction. And again, the trend line for all of these, total, crypto, blah, 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 they have time. They need to do work. If we just clone the line and we create a trend channel like this, just mirror that downtrend. Make sure it's perpendicular in terms of evening out on the slope. It's kind of like that. That's your downtrend channel. So we're on the lower side, and again, we're thinking up, come back, and then back down. But at this point, we're stabilized. That's definition of stabilized right there. Check back, bang, give me a bullish candle on this week, and then you go. Let's get to one or two more crypto, and then we can get on those other markets we need to talk about. Let's do the quick sandbox update. Sand just stabilizing here. Did not come back on the weekly, but the daily's there. I mean, we've got patterns. Most of these do have patterns. 108 off of that hop level, but I know there was a big crab here on the weekly, wasn't there? Oh no, big bat pattern on the Binance feed. Did not check back to 82, 83. All you're looking for is a close above the last 3 weeks. So as I said before, close above 136, 137, that goes. That goes. Also, we need to put together a group of the crypto that are now in their safe space. What's the safe space? To the right of the downtrend. That's a really great starting point for the first time. Just take it off the all-time peak and let's start to play with that, because it's interesting. That is quite interesting. You can build your zone with the terminal bar, which is right there back on May 9 at around $1. Confirmation with a check back about 85 cents. I think you're fair game in here. 85 up to maybe, even though XA level of the bat is 148. So we're under the zone. Now we're looking for those developments to continue. A lot of this is really coming together. Solana, that was another one. This did check back on your weekly, and that's 32 bucks. You're right there. You had another opportunity yesterday. Check this out. We came back and retested even the daily. It's got an ugly, and that's an ugly pattern, by any stretch of the imagination. Look, a hop down here at 37. But you've got the weekly levels are the more critical areas to be really focused on. And again, Solana making progress still will take time to violate that downtrend. But you're maybe 4 weeks away from busting that. Could happen at a higher price. You could pop above 40, 42 and get going. I just think, look, you're down in a ditch here. We are down in a ditch. I think if this can just dry up in terms of the volume, continue to go sideways and build as in start forming higher lows, some higher highs, so be it. Interesting stuff. Here's another one that seems to want to do things, storage. But this is setting up where you have a type 2 crab in development that keep an eye on it. We had a big thrush to their target 1. Big reaction up to target 1, type 1 reaction. Then we're coming back down. So somewhere your XA level around 38. You're trading 63, but this is the kind of thing I'm looking for in all of them. This is further along. But, this one basically did react back in June, came back up. Now we come back down. If this is Bitcoin or Ethereum, this takes 30, 60 days to do the 1-2. But you're starting to see it. You're starting to see it in some of the altcoins that I think are interesting. Some are leading, others are lagging, but they're in a nice spot. Here's another one, LRC. Check this out. Daily, okay? Beautiful bat pattern. LRC, folks, right at 35.35 cents, and we just checked back. 35 cents, call it. LRC, and look at your weekly. See how this is all coming together? I mean, this is Harmonic. I mean, maybe I should write a 5th book or a Harmonic Trading Volume 4 book. And just do it all on crypto. Because this is textbook stuff. And this is the kind of thing you want to see. Look, LRC is there. Draw your trend line down into the zone. You're 3 weeks. 3 weeks broken that downtrend line. Don't sleep on it. Please don't. You've done so many things here that are ideal in terms of a harmonic phenomenon. Here's where you have terminal bar of the big all-time 886 harmonic reset. 88.6% of that whole move was trading what? 350. Now you can get it 90% off at 35 cents. Just because it's down 90% doesn't mean that's just a buy unto itself, but you have a real pattern. Step 1, completion with the terminal bar. You have a trigger. This is the trigger, HSI. Okay, in the oversold, you have the check back. All of that warrants close examination of that 35 cent mark, and should not take out that prior low. Anything really above these current lows under 30 cents, that's a real low risk to reward. Because I would still say that this is type 1 material. Might take weeks or months, but down here at 35 cents, target 1 is 169. You tell me. You tell me. Really quick, let me tell you folks something. Please get your butt over to harmonictrader.com and become a basic member. And get all this cool stuff like, oh well, you can subscribe as a gold member, but become a basic member and get all of these. I think I got the MetaTrader thing worked out for next week. I'll show everybody that scanner. I think that's going to be a great solution for people. And everybody that's in here or watching the program, please You have to get with the TradingView program. And we'll give you 2 weeks. Send your TradingView username to hpc@sr-analyst.com. Get a 14-day free trial. And after the 14 days, if you want another 14 days, please ask. Just send another note. Okay, if you've had 2 trials, that's enough. Try one of the other ones. And then, as I said in the last few sessions, the books are right here. So download your books. So let's give away another book. Who wants a volume 3? Okay, how do we do this? Let's see here. Okay, what's the check back number on LRC? What's the check back number? We're looking for a specific number. Check back number on LRC of the weekly. First person to put that correct number in there will get it. Right there, that bar, that low. And please, only if you have not won a book already, and we'll send you one. You got to get in touch with Miss Stephanie on the Discord. I'll show you where that happens as well. If you're a basic member, okay, basic member, and then scroll down to the bottom of the page and join our Discord right there. Hit that link. Mr. Ken, I'll give it to you, Mr. Ken. Mr. Ken at 35.8, you're right. Send a note to Miss Stephanie, okay? And Eric, you're a gold member. Eric's a gold member. So Eric, since you're a gold member, and anybody that subscribes as a gold member, you guys get a free book. So Eric, you just need to contact Stephanie on the Discord and send her your address, and I'll mail you a volume 3. And anyone else that is a subscriber to our gold membership, it comes with a free book. So just know. Also, for gold members, I just wanted to show, boy, I screwed up. I forgot to post the market report for July, but it's finally up there. And then I did 3 ideas. So we got a new 3 ideas. So check that out. That's under our live harmonic trading sessions. This is a part of the new premium material. You also, as a gold member and silver member, you get access to a monthly subscription. So gold member people can get both TradingView and another one. Silver members can only choose one. If you have any questions, contact Miss Stephanie, please, on the Discord. We'll do one more. Martin asks, would I recommend to use the free trial after reading volume 1? Martin, I would do both. Martin's asking, okay, do I look at volume 3? Or sorry, do I look at volume 1 first? If you're new, let's do it that way. Here, if you're new, download the books and just get into those. And they're all on basic members. They're on all the pages too. But what I would recommend book-wise is if you're brand new to the patterns, get into volume 1 and just rip through what the basic measurements are, what are harmonic levels, what is this all about? I mean, really, there's you know, I mean, it's people that are new to the harmonic measurements don't really necessarily know what is harmonic. And so the measurements are all related to specific sacred geometry or whatever you want to, however you want to call it. It all relates to the market phyllotaxis, those patterns that form based on the harmonic ratio measurements. I mean, here are your harmonic ratios. They're all derived principally from the 618 and 1618. Although there's other complementary derived ratios. I don't want to get into that today, but get familiar with the basics like that and then jump into volume 3. I think is probably has it all together in one spot. Volume 2 also great for confirmation strategies, but get that and look at the charts as we're doing it. Look at it's you know, these are all learning tools, and that's why we make the trial free, because we want people to be able to work with the charts in real situations as they're happening. It's the quickest way, best way to learn. There's a lot of things we have done over the last, I don't know, many weeks and months that have been just spot on. And this is another one where we're right there, deep in the hole, pattern completion, confirmation, everything you want to see ideal. That is a great learning experience if you're new, and major opportunity for crypto people like myself and others that we don't want to dismiss. We're early in all of this, but we're trying to pinpoint some kind of inflection low, some kind of stabilization that would give us a reaction out of this mess. Keep an eye on it. But that's what we do. Can I comment on the silver? Where do you see support? Oh, and silver. All right, I'll get to silver and gold in a second here. We've got a few things. And then I'm going to have to get out of here right at 1 o'clock today. One or two more. Somebody had, what did you want to look? Somebody just posted something. Let me go back. All right. Engine coin. That's right. So, and I wanted to bring this up because that, did we look at that already? Here's Engine coin. Look, Engine coin, and a lot of these have, look, there's massive pattern on Engine coin. Beautiful. And it's still blue, but that's an all-time bullish bat. These are, folks, I cannot stress enough how ideal these scenarios are coming together. Look, if it's not showing it because it hasn't officially completed yet, I'm going to have to look why, but it's like this, X to A, you know, here's your B point, connecting dots down to your 886. I mean, it's beautiful. 886 is like there, around 59. And we just got confirmation. Did we get the check back on Engine coin? Close, around 44 cents. So look, if you're into crypto and you were waiting for an opportunity, we are at the first inning here. It's going to take time. You're going to have more consolidation, but this is huge stuff. And I cannot emphasize this enough of that down in these areas of complete oblivion is substantial opportunity. The big thing also is, look, stuff like Engine coin is to the right of the downtrend. You could stretch that out all you want. But the longer you go, even just sideways, the better this gets. I mean, even if that's not even, you want to draw your trend lines along the top edge of whatever the downtrend is and encompass it all. This thing popped out, interestingly enough, right on the 21st of June. So get ready. This is the place to be starting to line things up. Some coins aren't going to make it. Some coins are basically going to flop, and we've seen that where some just don't have anything going on. Others, much more. Others with confirmation, with your weekly stuff, probably even the monthly. That's why we have to get out of this month. Getting out of this month is so critical for crypto, where you are really 2, almost 3 weeks until that happens. You do not want to see, say, Bitcoin or anything go lower. You don't want to see any of those lows get taken out. Let's say you've been burned by crypto, and we all have been to some extent this year, and you're a little not so confident going back in the water. Then wait till next month. Just wait until next month, because we've got so much time, plenty of time in this development, that even if that's your pattern here, okay, this is about to start a 30-week phase, reaction phase. 30 weeks off of Engine coin puts you into January. So do be mindful of this phase that's happening. Martin is asking, do we draw the measurements from the top of the wick? Absolutely. Absolutely. Because that's the total range. Hey, if it traded there, unless it's something, erroneous, but if it traded there, that establishes the range. I mean, just like here on Engine Coin's first peak, is that a relevant peak? Absolutely. Even though that's a really big wick, that's critical. And use that as the whole measurement range. Keep an eye on it. I think by Sunday, and we get to Monday, our next session, we're going to have some real things. I wouldn't be surprised to see some things moving by Monday, Tuesday. Maybe even some things start to jump this weekend. Remember, back on the 21st, 22nd, I said we got about 2 more weeks. Well, it took 3, and now we're here. Big stuff. All right, speaking of bigger stuff, let's talk about these markets. Okay, what's going to happen? I posted the monthly report, and I basically said, what are we looking for at this point in the markets? Is a generational low. We're looking for some kind of low that's going to form and be the low for the decade. Where is that going to happen? Is it going to happen here at the 50% level? For NASDAQ, NASDAQ is just, there you go, look at that. Your 50% level is at 11,733, basically 11,7. You'd need to get above that. And you're squeezed in this zone. Now, a lot of markets, commodity markets, are doing a lot more than equities at the moment, but this is really bunched up here. After a weekly HSI, can we get some kind of reaction off of this? Because I still think this is possible in the longer term, where you come back down. You come up, and then this whole thing off the COVID low becomes a massive bat. Kind of works out like crypto too. Maybe a reaction now into the fall and then roll over. Keep an eye on it. You got a few things here. S&P and the Dow. Here's the Dow. I think this is interesting. Oh, I should go back to the trading view. Let me go back to the trading view. Here's trading view. Let's look at the Dow diamonds. They do have, you were down 650. Okay? This morning, you're still down 400. But look, you've got this big butterfly in the diamonds. There you go. 30,000 is your support low. Take a look at the fact that we are back, 30,300 or so. This little check back level. It's like this. That highlights your zone. This would have to stop. So whatever happens today, whatever happens into tomorrow, you pretty much need to see this thing pivot, stop, and start to move off of this big butterfly pattern today. Today. There's no room. I mean, this thing it's out of time. It has to come up like that. Maybe even go as high as the target too at 345. That would put you around 34,000. That would be a big bounce. You've got several things here, no doubt. HSI is coming back down. That's the thing that when you get this close to HSI coming in, you kind of want to see it complete to give you the ideal confirmation. Same with standard. There's amplified RSI. Let's see what happens tomorrow. And certainly by Monday. I mean, it's a no-brainer. Under the lows at 29.6 or whatever, then the larger scenario takes shape that this does not stop until what we were looking at, the COVID. Here's your COVID range. And that's really every market, any market you're looking at is all about the COVID range. How much of the COVID rally have you retraced? Right there, you're barely at a 382. That's what that number is. Basically, your 29,800 is the 382. Can you come down to say, oh, I don't know. Wait, let me do it this way. Do it this way. Your 382, that's S&P and the Dow are at their COVID 382s, like that. You come down to the 618 because that would be your deeper retracement around 25,000, something like that. I mean, I don't, I would think could be something like this. If we're into a bear market, which I kind of think we are, it's still going to take time where you stretch out and then form a bat like that. Nothing goes straight up, straight down. Want to see how this comes together, but we can't hold here, and we'll know. We'll know by Monday. We'll come in here Monday, and if this fails, then you're just going to grind it lower down to this 50 level like that. Maybe you get a B point here, then a counter trend bounce, and then finally make your run to the 886 by, I don't know, next year some point. Bear markets take time, folks. 15 months is the average bear market. 15 months. Got to keep an eye on this. There's just individual action outside the daily levels being oversold, what have you, not impressive. I mean, you don't have a single week. The weekly bars are just, look at your action off the top. The thing that I notice is a serial continuation of lower highs. Almost every week is a lower high and no follow through. When's the last time you saw 2 weekly highs or 2 weekly closes that were bullish? Maybe all the way back here in March. Not the kind of price action you see that's constructive at all. And not to mention, the major markets are going to have to do the same thing that crypto is going to need to do, meaning that's going to have to come up. You're going to have to straighten out that downtrend, resolve it, and that's a lot of work before you can even break out of that downtrend line. This is bring it like this. Here, let's build the channel. The channel kind of looks like this. Let me do it this way. Looks like that. That's a pretty good channel. Off the top, sure. So if we're going to keep sliding here, a failure, again, under 29.7, you're in big trouble. Big trouble. You don't have, again, it's not a lot either in terms of HSI doing much, amplified. This is still in a clear downtrend. Just run a trend line on your amplified RSI. That indicator needs to break out before anything can happen. You would want to see it do something like this, go down and then come back out as the first move. So major markets, they've got a ways to go. Nothing constructive there. I just think you got to be patient with it. I know you folks have been looking and angling for some insight on gold and silver. Let's go there because they've been crushed in this commodity collapse. Okay. After that deep crab, we're now back to back. So we had a crab pattern. We were looking for a reaction down to 1831 or so. HSI never triggered. That's the crazy thing about this. We were looking for HSI to trigger. It didn't get there until now. Amplified, oversold, and now this yellow structure, that means we have a pending pattern on the weekly. 886 is at 1723. You're already 1700. I would hold off on this until I see a weekly bullish candle. Do nothing. There's really not much to do here. But if we get a weekly pivot, that could be something where gold could do a type 1 reaction, 1841, then come back down. If this is going to break, I mean, just go to the monthly. This is the other interesting thing. Okay, big monthly uptrend looks like this. They're really two trend lines. This would be your primary, gets you all the way back to 1500, and our accelerated trend line's busted. So you go off of that low, encompass these lows, it's like that. That's a little problematic. If you're in gold, you're a little concerned. And I'm a bit surprised by that. I think that must be saying other things are developing. Maybe despite everything that they're talking about on the front headlines, there's probably some bigger things that are developing on the backside that suggest this is getting going. There's the bat pattern on the daily. We never got a type 1. We did have it on the daily. We were looking for this. Up to target 1 in 19.7 and back down. But it's not a type 1 because he never got to target 1. Now, HSI confirming. Let's see. That's at 1730. Your hop at 1707. Essentially, today has to be the low. Has to be the low. Why is this happening? Well, we talked about this last time. It's dollar index. But dollar index is also close to a major number. Go like this. Dollar index, folks. Wow, all the way up at 108 already, but it's the monthly. Check out your monthly. There you go. It's a type 2 crab pattern. Hop level is at 106. Okay, 106.15. But HSI has not triggered, so this could be a real critical month. Need to see HSI roll out of the zone before I would even consider that move over. Nice one, though. I mean, this is real, a great structure, great pattern. I think on the quarterly, too, you're talking long-term numbers. Yeah, quarterly chart. That's beautiful. That's at 107. That's a perfect type 2. Look at how this happens on a quarterly chart. Type 1 down to 91, back up type 2. Okay, give me an arrow. Need to see an arrow in the next 2 months to end this show. I don't know why that's not coming up. Let me go 2 month. See if it calculates it that way. No, I just wait for the monthly HSI within the, yeah. The monthly's going to have to trigger even if it's quarterly. If we look at the quarterly chart, I would still favor a monthly HSI signal. So dollar index, if that's going to continue, or even better, think of it this way. If it's not going to trigger, those other markets, those commodity and gold markets, are going to take more time to go lower. Yeah. Yeah, the crab pattern did destroy gold. It destroyed it more than I thought. I thought it would be reaction. Take again, that weekly crab looks like this. It was pretty. It was pretty. Where'd it go? I want to delete that. There you go. And that was a tough one because that was such an impulsive move up to the 1618. Absolute rejection. No type 2 happening now. No type 2 to come back. I really thought we could get HSI to trigger and come back like that. Nope. HSI never triggered. That's why we got to wait for it. I mean, prime example of jumping the gun or not. All depends on what this does here. It went deep, oversold. Still needs time. Standard RSI probably will come in and register as well. So, hey, if you see gold down at 1621, don't be surprised. Don't be surprised. That's just getting the clock cleaned. A lot of it has to deal with this. Let me bring this chart back. Let's go to the interest rate chart really quick. Go to the bonds. There you go. US 10-year chart. Remember this crab pattern we were talking about forever? I was really complaining about this back in April. That's a huge bat pattern. Anything above 2.9 has had trouble going higher. I think I mentioned this last week. We're looking for this thing to roll over. No HSI up here to support it. The HSI, the last one was here well before your pattern completion. It's like this. Okay, there's pattern completion. We typically want to see HSI after that level. That would trigger the move to target 1 down to 196. That would be a hell of a move. And it's still possible, but we need the HSI to trigger. This could vacillate between 2.9 and maybe 3.4 on the top side here. We're going to wait and see. The fact that you have the news that you had, you would think rates would be spiking, but they're not. On the weekly basis, the 10-year, I would say that you have 2 peaks and now breaking down, where this at a minimum could lead to some kind of reaction. Even if it's not a full type 1, I'm going to respect that until minimum 50 test. You're almost there at the 50 anyway. Or this turns around. So on a weekly chart, you're in a harmonic pause on interest rates. Yeah, nice, David. David, you beat me to it. You're reading my mind. And this little move, if you could get rates back down to target 1 at 196 in the 10-year, yeah, the markets would rage. You'd get a massive pump up. But it's not there yet. You don't have HSI confirmation where you need it. So look at it this way. Here's your zone. Okay, you need to see a close essentially under 280. And then we'll deal with it later. It's a long way to go within this whole framework of bear market, recovery, end of the bear market, however you want to spell it out. There's a lot that has to happen. So treat everything as a reaction until then. I mean, the Bitcoin stuff and crypto, still a reaction. And I don't expect anything major for a while. I mean, into the end of the year, everything will probably be a reaction. Maybe set up for something later in the year to where you could get larger reversals. But it's just, you're at a point where, it's kind of like where we were in March or April, where the position of everything just wasn't right. It's just not in the right spot, relative location, where major things can develop. So anything that does, treat it as a reaction. Okay, 1 or 2 more, and then I got to get out of here. Let's really go back to crude oil. I'm going to bring this back up here. The XLE getting hit again. I think we're going to have to look at crude oil lower. Continuing lower. XLE, depending on what time frame you're looking at, has levels, but they're like 10% lower still. Nothing really triggered. Go to the weekly. Okay. Remember the deep crab. Actually, back-to-back crabs on all of this. Now we're finally at target 1 off the weekly, but take a look. Okay, we need HSI. So literally just hitting it now under 66.41. I need to see an HSI signal somewhere in here. And we're nowhere close. That's a problem. Not necessarily a problem, but look, if you're looking for energy or an opportunity to get long energy, It did not come together where we would normally see it. If anything, my guess is this thing continues lower until you get down to the oversold. You're also under this 50 line. So if crude oil really drops out of bed and does not give you any kind of stabilization on the daily chart, probably uglier. Yeah, look, HSI is going back into the zone on the daily. That's an immediate continuation. This will immediately trend lower back into the zone, where a couple of these pattern targets look to take you as low as 61, 62. Right now trading 66. Never got the confirmation we were looking for, and this is just falling apart. And your monthly time frame, well, look at this. Rolling over. I mean, that's a big engulfing on the monthly. Check this out with continuation. I'm not so the single engulfing pattern from last month, okay, that's a warning sign. Now, any close under 69, and that's a larger continuation that gives you the full 3-bar reversal. So I want to keep an eye on that one. You know, absolutely keep an eye on that. I think energy is going to take you lower, which we talked about crude oil. And let me finish it up on this where, okay, what's the maximum possibility on crude oil? Is this crazy? 382 retracement like this goes to 65. If it continues lower, I would say look for a close under 93 or even 90. You get a close under 90, then we get something like this. Get a 382 back to 65 bucks. That is starting to become a little more relevant. This whole thing might be the first move, okay, up to there, come back down, the 382, and then go. Why? I entertained this idea. I was like, well, maybe this could happen because that 125 level got rejected. If we're going to see this thing break out eventually to all-time new highs, there's your 886. So what is it? It becomes a deep crab. So your 382, come back, and that's a big 382 reaction off the 886, and then you go, and then you launch off of 65. That is not out of the question. It's like that. And that's how you get up to the 230, 260. And we have precedent. Look, the last couple of energy crises did this. And I don't want to sleep on it. You go to the last place where this broke out. We go to, say, all right, here's a perfect example. The 90s market. And in the 90s, late 90s, spent a lot of time at the New York Mercantile, which was amazing. Thank you, my buddy Larry. But it's like this, okay? You had a big correction. I remember that correction from 38 all the way down to about 10 bucks. I was on the floor the day we hit that $12 move. And then you went to an 886. Okay? You went to that 886. You came back. This one did, check out this. After that big move, you went to almost a 786, but certainly past the 50. So that first thrust came back down, and then the mega bull market breakout came after the fact. And that's where we are now, where we're going to have a crazy move like that. Yeah, maybe we need to do a 382. that is for me, the way the measurements coming together, this rejection at 125. Yeah, I think that could really shape up proportionally. So I'm just gonna hold off on energy picks. I'm gonna hold off on anything like that. It's a lot of volatility, a lot of craziness, but measuring this up helps to kind of clarify that possibility. I don't think that the overall fundamental picture will change. I don't. I still say we're in an energy crisis no matter what, or energy malaise is probably a better way to say it. But if we can get that 382 pullback, that would actually set you up probably for the best bullish reasons for later, for an eventual, what I think is still fair game, is to say eventually we're going to get a 1618. Eventually, when that breaks out, the 1618 all time on the continuous futures is 270. Just put it in your mind. It's not going to happen this year. Could be next year. Could be 2024. But that's what I think eventually could play out. It's going to need this 382 pullback to do so. And then you get an ABCD off the bottom. All right, bang, 230, 240 to 270. But that's how we do it, with a stiff 3-month, 4-month pullback, maybe as low as 65. I think that we need to be mindful of that. I think a lot of people would say then at that point that crude oil is done and finished. And no, I would actually argue that this is going to be a massive opportunity. The daily, weekly time frames, they didn't line up properly. They're not lining up properly. So let's just be aware of that. I mean, there's a daily. Let me delete all these stupid lines, but yeah, you have a shark even on the daily on continuous crude futures. The shark pattern that it has completed, it has some complementary zones that as low as 88 or even as low as 84 on this move. So the down move in energy is not over yet, folks. Your daily as well. Look at HSI. Not there yet. So energy could come lower, and that could be a stimulus for the market. Let's just not sleep on it. I measurement-wise, I'm trying to block everything else out and just go off the metrics. And then formulate some ideas from that standpoint. Everything's going to be a reaction. I don't look at any major trend to be resolved until we can really complete the next 3 months. The next 3 months into October, November, absolute crunch time. Beyond that, we'll really see. But for Monday, keep your eye on this crypto. Keep your eye on the crypto for Monday. We'll come back at 12 noon. So until then, have a great weekend, everyone. We'll catch you next week. As always, go get them. And if you have any questions, you know where to go. HarmonicTrader.com. Take care. Go get them.